All right, here we go. So, yesterday, the major indices recorded the first win after 2-day decline. And what's in store for today? Will this winning streak continue? And also, how does this affect our positions? Plus, we have two more trades today that we want to show you, trades that we entered this morning. Now, with that said, welcome to Coffee with Marcus and Mark. And today is Thursday, March 7th. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And with that said, I mean, yesterday indices snapped a losing streak. I mean, kind of yesterday, Mark, they were diddling around if you're looking at a 5-minute chart of the S&P. But today, nice follow through.
Exactly, Marcus. And we had a rough start to the week. That became pretty obvious as traders trying to figure out what comes next with the Fed and Powell's testimony and then jobs on Friday. But a nice little pop yesterday, even though there was a bit of a diddle. And then today, like you said, great follow through, gap higher, and right now trading near session highs.
Yeah, just like this, we are positive for the week right now. As said, after a rough start, we see here Monday diddling along. Tuesday, a pretty good slide. Then yesterday, traders tried to figure out what to make out of Powell's testimony. And I mean, no news was good news. Powell basically just read the same statement that he already made at the end of January. And especially with all the new data that we had, I think it was good that he didn't say, yeah, the new data is concerning me, that he was kind of shrugging it off.
Exactly. And then in overnight trading, we did get a little more optimism out of Europe, actually. So we're focused on Powell and what the Fed's going to do in the U.S. But if you look at a 5-minute chart, you'll see there that the mini S&P, after dipping in the Asian session, rallied in the European session. And that was because the European Central Bank, although they kept their rates the same, they said that they lowered their forecast for annual inflation and growth. So um, that was a positive, and it carried over into the U.S. markets.
Yeah, and this were also, I mean, hinting at a June cut, and this were traders here. Wait, June? There was something in June. So let's talk about June. So, okay, maybe this is where in June our Fed is cutting the rates. I just need to switch over to the probabilities and then move over there. So this is where probably some excitement about just the word June, but we see that the probabilities are still hinting at July. But yeah, I mean, this is where some excitement after good news from Europe that, yeah, inflation seems to come down.
Sure, and lower prices with foreign products and goods is that trickles into the U.S. for sure. So we're not just our own island, and traders liking that information, and markets are, well, the S&Ps, heck, record highs, right?
Record highs again, if you look at this. So this morning opening higher, and then after a very short dip, now just a few minutes ago, trading at session highs, pulling back a little bit. It's also interesting. Interest rates, if you look at this today, are a little bit all over the place. I mean, there was this dip and then bouncing right back. I mean, the 10-year yield, in fact, up today.
And yes, it's higher. It's actually right now in line with the 5-year yield, but I'm seeing the 2-year yield down while the 10-year yield's up. And so this goes back to the normal yield curve progression that we see as we go further out in time. So maybe things starting to get back in sync with what would be expected in a normal environment.
Yeah. Well, see. Now, before we take a look at our positions and some individual stocks, got to talk about Bitcoin. So, Bitcoin again today moving higher, making another run of possibly making another record high today or tomorrow. We'll see. Sometimes, I mean, cryptocurrency markets are open 24/7. It could actually happen over the weekend.
It could, but Marcus, the real question here is, have you accessed your Bitcoin yet?
No, some of it. It's on my list. But right now, so before we continue, I'm facing a much more difficult decision, and the decision is, as some of you might know, I have this massive 3,000 square foot deck that collapsed, and right now the question is: do we replace it with another wooden deck, or do we go with concrete? We just talked about it right before the show. So if any of you have any suggestions, wood versus concrete, let me know in the comments. Want to hear what you think about this. All right. So today, couple of stocks moving today. Victoria's Secrets, VSCO reporting earnings and down 30%.
Yeah, the secret is out here. So pretty substantial slide. It's interesting. We've seen this recently this week with retail, where there's been some disappointments. They beat on earnings, but reported weaker revenue than expected. And once again, it's guidance. Right now in retail, it seems like the theme is earnings better, but guidance for the year weaker, and that's beating up some retail stocks.
Yeah, so Victoria's Secret right now down 30%. And yeah, I said we had the same with JWN yesterday, beating on earnings but providing weaker guidance, down 16%. And then the same happened to Foot Locker, also beating on earnings but providing lower guidance, down 30%. As you said, it's right now going around on retail.
It is, and
And then there's Kroger.
There's Kroger. Do you want to talk about Kroger?
Yeah, then there's Kroger reporting earnings, and Kroger unfazed. I mean, earnings beat of 18% here, much higher than expected. And Kroger up and away today, up 7.72%.
Hey, can't complain if you're owning Kroger. I was cracking up here, and this is so stupid and juvenile of me, but if you go back to VSCO and TradingView, if you look at the sector industry, apparel, footwear, retail. Now, I know that there's bigger picture sectors, but I've never been in a Victoria's Secret shopping for shoes.
Well, you have.
We'll just leave it at that. Just little silly juvenile crack-ups over here, and I apologize to everybody in advance.
Yeah, and to be honest, if you would be shopping at Victoria's Secret for shoes, I would be concerned on a whole different other level. Like, okay, but hey, it's
I swear it was for the shoes. It was the shoes.
It was the shoes. Yeah. Okay.
All right.
Where do we start today? Wheel or WTF?
Now let's mix it up from yesterday. Go WTF.
Let's go WTF first. Win the fear strategy. Pretty active here right now. So we are already in CVS. That is a position that we are in. So CVS, we actually got in at 73.40. Right now trading at 73.95. Not yet doing what we wanted to do, because what we want to see with the win the fear strategy, that first it dips and then we have a quick pop higher. So CVS not yet showing us this quick pop, just hanging out here. So we'll see what happens there when we close this one.
Sure. Still positive, but we definitely like a little more follow through to the upside.
Yeah. Merck kind of behaving the same way. I mean, we had the move lower that we are looking for. We bought it right here. So I think we're up a little bit. We got this. No, actually down a little bit. We got it at a 124.68. Right now trading at 172.23. So $1 lower. But hey, I think we got it right here on this bar right here at the open. Yeah. All right. Well, still waiting for the pop higher. And then today we had two more signals, one of them being Pinduoduo, PDD. Actually working out pretty good. I got filled at 116 even, and I think the same is true for you, right?
That's correct.
Yeah. Right now, trading a dollar higher, so we'll take this. And then another one that popped up is Verisk Analytics. So Verisk Analytics, we got filled at 237.66. Right now, down 30 cents. So, but we see what we want to see with the win the fear strategy. We're first moving lower, and then we expect it to pop higher. Here we also have some support from the 200-day moving average that might work in our favor.
Looks like it right now. So looking to see where we go from here. Marcus, I took another one. I don't think you got into this one, but I have
Oh, yeah.
another one, and that's PayX.
PayX, you got into this one, and this is looking good. You got into this one yesterday at 120.12, and right now it's already trading at 121.36. So this is up nicely.
Yeah, yeah. So can't complain. All in all, I think I'm in 5 WTFs here in 4, and hey, strategy's working out nicely this year.
It is. It is. So hopping over to the wheel, and we first have Apple. And Apple, I'm rooting for Apple to go below 167.50. That's where we sold puts. If tomorrow afternoon, after the close, Apple will be trading below 167.50, we will get assigned. And I am looking forward to this because honestly, if I get assigned, I'm planning to ride this back up to probably 174 for a gap fill here, or maybe even 175.
Yeah, I love it. We'll just see where we end up. Definitely having a bit of a rough time. We're down 6, going on, I think it's going on 7th consecutive losing day for
Yeah.
Apple, but that doesn't last too long. So uh, I'm comfortable at 167.50.
Yeah. We'll see. And then there's our little buddy CSIQ, and CSIQ having a little bit better days here. So after making lows, almost scratching 1950, we're now up back to 2050. And again, we just want to see that it moves higher. 7 days before they report earnings. So this is the wild card. We'll see what happens here. And it's always interesting in the final days before earnings to see, all right, what are traders expecting? Are they positioning themselves to be long into earnings, or are they positioned to be short into earnings? So we'll see what happens here over the next few days.
Yeah, exactly. And quite honestly, of course, I would rather be up than down, but if it is going to pull back, I definitely want to see these reactions to support, just like we are seeing, where we dip a little bit, but then we bounce back, kind of like a rubber ducky.
Yeah, and if you look at the options pricing right now, I mean, if you look at the expected move by March 15th, which would be the day after earnings, could be anywhere between 1842 on the downside and 2267 on the upside. As you said, we'll take the upside. So let's forget about this and we just circle
Forget about
this and make a smiley face next to this one so that we know that's where we want to go. So this would be a pretty good jump here.
Yeah, I think that you just won an award for trader drawing chart analytics because this is a true CSIQ chart that we want to see, smiley face and all.
Exactly. All right. We will know more next week. Until then, we keep watching it. Now, GDXJ just up and away. We both have a position at 33. We both sold calls against half of our position at 33. You sold some more calls at 34. I sold some more at 35. Right now, we are trading at 35.77. I looked at it this morning and I might actually roll my position tomorrow. What about you? Are you considering rolling, or do you let this one get called away?
So at 33, there just isn't enough premium to have it worthwhile. So on the 33 calls, I'm definitely getting called away half of my position unless there's a big drop tomorrow. The 34, there's some not too attractive. You're at 35, so definitely looks better for you. If I was at 35, it would definitely be on the table for me. I'm watching it at 34. I'm open to having those calls rolled, but at least right now, the premium's tough.
Anyhow, so this will be a great trade. Um, might become my second most profitable trade after MRO, which worked out really, really great. So we'll see where we are on Monday. So NEE again, still staying in this range between 55 and 58 right here, and right now trading at 56. So pretty much we're moving towards the middle of the range, up 0.9% today.
Yeah, if you're gonna hang out in the range rather than down. So any do your thing now.
Yeah.
Speaking of doing your thing, UPS.
You man, I can take another look at this and see if maybe I can now start selling calls. Ooh, look at this. It's getting close. It's getting close. I mean, for the 157.50 right now, I can probably get 95 cents, which would be 24% annualized. I mean, we are
Nice.
getting there, that we are getting back into call selling territory.
Yeah, that's great. Still outside of call selling territory for me, with my assignment up there at 167.50, but definitely like this gap fill and the way that we're moving right now. Also, a dividend of a buck 63 getting deposited tomorrow, so I'll take that. These dividends are helping the break even for sure.
Yeah, I mean, my break even already at 139.68. With the dividend, the break even will go down to 138. Right now, we are trading at 154.44. So all of this is looking really, really good.
Yeah, nice trading on your end, Marcus.
Yeah, so we'll see what happens there. I'm definitely keeping an eye on this. I might actually put a fishing order in there and see if I can get my 30% at 157.50. And then I believe that I'll sell some more at 160. So this is where I'm also splitting my covered calls here, half position at 157.50. The other half at 160. Might go a little bit higher. I'll think about that today. Because, I
Okay.
mean, we have been, okay. You need to go up to 165, right?
Yeah. Or
Okay.
167.50.
Oh, yeah.
I
Maybe I'll
need
join
to.
you there. We'll see.
Yeah. Sorry, all of a sudden 165. I'm sorry. Yeah,
Yeah,
you were right.
165. That's
You're
what I
right.
thought.
I
Yeah.
don't know why all of a sudden I thought it was 167.50, but sure, my break even is 158.57, so that buck 63 will help. And yeah, that would put my break even around 157. I don't need to sell calls aggressively, but I definitely like your plan. If I was in at the lower cost basis, I love the idea of splitting it up.
Yeah. So my plan is probably to do 157.50 and then 162.50. Kind of joining you there, not going as high as 165, but maybe seeing if we can break above this. So, anyhow, I'll keep you all posted of what I'm thinking and what's happening. Looking back at the markets right now, S&P pulling back a little bit, but still trading at making new all-time highs. Same in the Nasdaq here. Let's just switch back to the daily chart. No, the Nasdaq not yet. So, but it is the S&P. So both the Dow and the Nasdaq are lagging, not making new all-time highs. We will see where we end up today.
Yes, but looking good.
Yeah.
Looking good.
Now, tomorrow morning, super important. We have the jobs report coming out tomorrow morning, so you don't want to miss it. If you enjoyed today's show, do us a favor and give us a like. Feel free to share this with others. There's a share button right underneath. And then make sure that you tune in tomorrow because we have the jobs report for February. And I mean, this is something that the Fed is definitely keeping an eye on. And this jobs report can rock the markets, right, Mark? I mean, this will be a big one.
It definitely can, especially if there is a surprise. And there have been a few surprises with some of the data that the Fed watches recently. So
Yeah.
I'll be keeping an eye on it.
All right. Make sure to tune in. Until then, have a great rest of your day, and we'll see you tomorrow.
Happy trading, everybody.